Hopefully everybody is doing well, and I am getting married at the end of this week, and most of my family is flying Southwest, so this has been a disastrous of a day, and this will probably be one of the last videos I drop in some time. I might be able to get one more video out before the New Year's, but we will see what happens here. So if you're new to the channel, welcome in. The goal of this channel is to make investing as simple as possible and give my opinion for whatever that is worth. I want people to understand that I've had a price target on Palantir between $6 and $7 for over a year. Recently bumped it down to $5.25. Tesla had a price target around $100 on Tesla for about over a year. And with the S&P 500, I believe fair market for the should be anywhere between 3,400 to 3,500. And if we do go into recession, I tend to believe we will see 2,800 on the S&P 500. This is all free to use, as I don't think I have any advantage over anybody else, and therefore I refuse to charge anybody for a course or anything like that. Now on this watch list, guys, we've been updating it periodically here, and I know I have a lot of work to do to kind of get everything back in order, but I would not go off of anything unless if it has a date in front of it, or if I've dropped a video in recent time. So, you know, this is not financial advice, guys. This is just showing you my process and giving you guys an updated watch list that I'm personally keeping track of. Now, I think personally I would like to remove some of these stocks and get some more maybe growth opportunities out there, or maybe some even more deeper value opportunities that I'm overlooking. But I'm only one person, so guys, that's why I ask for your input. And when I'm asking for individual stock callouts, I tend to do a quick research on them and see if they are an opportunity to be put into this watch list. The goal going forward, guys, is going to be still finding defensive stocks that we can't live without, that yield. I would like to see a yield over 3%. And when we think about, you know, what's really been working, it has been these type of stocks. And I tend to think for the first quarter of next year, we're going to see the same. We've had negative GDP, but earnings really didn't come in as bad as people expected. And so I want this to be an example of the forward mechanism that the market is. When we get the reason why the market is dipping so much is it's starting to price in future earnings with yields changing. Okay, we've talked about the yield curve inversion. We've talked about how yields impact the debt market, impact stocks, impact bottom lines. We've talked about inflation, and wage inflation is probably another headwind we're going to be hearing a lot about in 2023. But what I want people to realize is, if we do start hearing the word recession and we start going into some sort of recession, the market's already pricing in this before we get into the actual recession as an economy. Okay, the stock market overall is slowly starting to price this in, I believe. If we look at kind of what my expectations are, basically 2,800 to 3,200 is about what I think we can see if we go into recession. I think fair value for the S&P needs to come down roughly 10% from where it is today, which gives it about a 3,400 to 3,500 price target. So I still believe as a whole, the market is overvalued. Now within the market, there's definitely tremendous amounts of opportunity I'm starting to see. But what I want people to understand is that these targets are probably going to get hit for a very limited amount of time, and that is the opportunity to get your cost basis down, in my opinion. If you are a long-term investor looking out 10 plus years, this is the opportunity to get your cost basis down and buy good quality companies. So I will leave this in a pinned comment down below, so make sure you guys check out the pinned comment down below, and that way there you get access to this. And you also get direct links to these websites, which is going to show you where the yields are and also what sectors are outperforming. So feel free to look at that. You also have here cycle analysis on how market cycles really work and what's going to perform well depending on the macro backdrop. You know, if we're heading into a recession, we can see that you're probably going to want to be overweight consumer staples, healthcare, utilities. We've talked about this numerous times. And the problem is a lot of these are expensive within certain areas. If you haven't made this move, you're already probably missed this move. So tend to want to probably lean on building cash or even looking at short-term treasuries to gain some yield. When we start getting closer to what we believe a market bottom is, definitely want to start accumulating the late contraction type stocks, the financials, the cyclicals, technology. These are companies that you want to start accumulating for the growth aspect once again. for once we start hitting a market bottom and look to start going into the expansion phase of the economic cycle. You want exposure to those type of stocks. So really quick, guys, if we have any chance of an end of year rally, in my last video, I stated we need to stay above this 3,800. So even though the market's been pretty volatile today, the one thing it's done, it's really trying to hold on to that 3,800 with the battle between the bulls and the bears right now. It's going to be interesting to see if we hold this 3,800 going into 2023 and maybe get an optimistic rally, as it's a new year. People are excited. The past is behind us. And we've had significant underperformance in the overall market in 2022, and people are probably going to be wanting to buy the dip. And I would just hesitate on that, as I do think we could be heading into an earnings recession. So once again, guys, I just don't think you need to rush to anything, but I tend to think that if we hold on to 3,800, there's still an opportunity here for a decent rally, guys. About 4,000 is where I think we tap out, but I tend to think we probably close the year around 3,900, which is a substantial move from here. So maybe we get that 2.5% to 3% move that I've talked about numerous times before the end of the year. But who knows? Volumes are light and it's definitely being manipulated right now. So we could get some bearish sentiment and that could send stocks down. We obviously know that Tesla has been in a massive drawdown, and that's no surprise to me, as we've talked about compression of multiples. And this was definitely one of the stocks that I thought was going to get hit the hardest. And the last one to fall, in my opinion, is still going to be Apple. If you were on the live stream last week, we talked about two stocks that I would consider to hide out in, where I think it will outperform the market. Number one was actually Verizon, guys. The reason why I picked Verizon is it hit a new 52-week low. It recently raised its dividend. We talked about the yield being over 7% at that time. Now, currently with the recent rally, it's at 6.8%. So Verizon was definitely one of the stocks we talked about to kind of hide out in for 2023, at least for the first couple quarters of 2023, as you're getting paid to wait. The stock is extremely beaten up, and it's at a very fair valuation in my opinion. So I just don't know if there's that much more downside to it. Now, of course, there could be some sort of thing that happens in this market, but Verizon was one I called out around $35 or $36. It is roughly up 10% in a very short period of time, and you also have that back end over 7% yield if you got in at those levels. So that was one of the first stocks that we called out on the live stream. Do I like Verizon forever? Not necessarily, but I would say this is probably a good place to hide out in for an extended period of time. The other one we talked about, guys, was Tyson Foods. Now, this one recently hit $59 a share. It was pushing over a 3.1% dividend, and this was one I called out at those levels as well. So Verizon and Tyson Foods, to me, were two that were kind of interesting stocks to hide out in, as they've had pretty significant drawdowns. When we factor in, Tyson was trading over $90 a share, was recently hit $59, and I thought that's an interesting area to kind of start building a position in Tyson. It's an interesting area to start building a position in Verizon at those levels, as you have that strong dividend yield and you have things that you really can't live without. Even if we go into a recession, are people going to stop eating? Probably not, especially when we factor in Tyson's one of the largest meat producers in the world. Are people going to stop using their cell phone and streaming and internet? Probably last thing that people are going to get rid of. So these two were ones that I thought you could kind of hide out in. Now, with the recent pops in both of them, I would say pump the brakes, maybe hold on here a second, build some cash, because I tend to think that these will probably retest where they were not that long ago. But they're good stocks that should pay you while you're waiting and maintain a lot of your purchasing power, which is the goal when we factor in that we could have a significant dip in this market. I would say hit that bell, consider subscribing. Our live stream can be very winded and long, but there's very important questions asked in these live streams that I tend to dig into and really have an open conversation with everybody. And that's how we arrive at some of these price targets, and that's how we arrive at some of these stocks that we're really showing some value. So while a lot of the information you might overlook, there's definitely some gems when we go live, as there's an interactive aspect to the live streams that you really can't get from me just dropping a video. So I would really recommend hitting that bell. Try to come to 1 or 2 live streams, interact with the crowd, ask questions. I won't always have all the right answers, but I'll do my best to give you what I personally think. Like, once again, guys, this is not financial advice. This is just me doing my best and offering as much free service as I possibly can with the knowledge that I have. And I learned just as much from you guys as I'm sure you're learning from me. So I can't thank you all enough for the kind words and support. And we will see you in the next one. Peace.